Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and our passion, or my passion at least, mechanical trading systems such as our mean reversion systems and of course our amazing KISS systems. Anyway, let's get to this video market newsletter at hand. It is the weekend, Sunday, July 21st in the afternoon. And this is my very comprehensive review of the major markets, commodities, precious metals, some trade ideas, cryptocurrencies, trading systems, you name it. This is our backend recorder for our standard website subscription service. Again, if you're not a subscriber to Breakpoint Trades, you're just watching us on YouTube, you're really missing out. You should consider joining us. You'll get access to our systems, all our newsletters instead of just 2 or 3 videos a week, trade ideas, community, etc. All right, I'm going to go ahead and get this started now for our subscription service. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Sunday, July 21st newsletter. First off, I hope everyone had a nice weekend. It is Sunday afternoon. Market futures are going to open here during this recording, so I'll let you know what things look like when futures open. And of course, as you know, unless you've been hiding under a rock or you've been outside all day, Biden stepped out of the race and he endorsed Kamala. So I doubt the market's going to have any real reactions on that. And remember, we're in earnings season. Okay, we have some major companies reporting this week. Google and Tesla on Tuesday, Meta on Thursday. Generally, the market holds up during earnings season, but we'll see how they react to earnings. Okay. And again, this weekend newsletter you can see is divided into 5 major sections. Actually, it's 6 because the first items I'm going to discuss are some of the systems. Okay. Last week, some of the mean reversion systems started to go long, especially on Friday. I sent out trade notifications on that. Mean reversion systems have been very quiet this year, so they actually started buying this dip. We are quite oversold in the short term, so I wouldn't be surprised to see at least a bounce here at any time. Again, the market finally had a rug pull last week. The S&P lost 2% for the week. NASDAQ lost 4%, so the techs really got hit. Whereas the Dow and Russell closed up 0.7 to 1.74% respectively. And that's despite both the Dow and the Russell selling off on Thursday and Friday. They still closed up for the week. Okay. That was primarily from the strength from Monday and Wednesday. Kind of had a blow off move in those areas and they got very overbought. But they're still up for the week. Again, commodities got absolutely pummeled. The DBC index lost 3%, crude oil lost 4.3%, natural gas lost 8.6%, copper down 7.8%. That's a big drop for copper, guys. And all the other commodities fell. There was absolutely no exception for the commodities, and none of them were up. Uranium, DBA, corn, wheat, coffee, gold, silver, you name it. So we'll go over that. Crypto had a nice week, about a 10% rally in Bitcoin. All right, let's go ahead and move on. So let's start with some admin things. So this image below here, this shows you 3 charts on one image. You can see the SPY on the upper left and ES are the other 2 charts. So as I stated, some of the mean reversion systems started to take long trades. So for SPY, the trend pullback system, mean reversion system triggered on Friday. So when in first entry here, I sent out trade notification to our subscribers. And for the ES futures, again, we run the 21 mechanical systems. We run them on both instruments, on both SPY and ES. So in ES, the trend pullback also triggered on Friday. So the same trade essentially on both SPY and ES. And actually, apologize guys, I have this same chart twice. I'll fix this in the recording. The QE Momo also took a long trade, which I sent out. Next. Image number 3. So here's the SPY and ES mean reversion systems live trades for this year. Again, it's been a quiet year for mean reversion. Why? Because the market has been so freaking strong. Mean reversion systems typically buy after a consolidation pullback, right? You're uptrending, you get a pullback, you get a short-term indicator oscillate oversold, they take a trade. Well, we haven't had much pullbacks this year. And so you can see 16 trades for the mean reversion systems on the SPY ETF, about 17 on the ES futures, okay? Again, you can see on the SPY the trend pullback, the long on Friday, and of course ES futures, you can see the long for the trend pullback and the QE Momo. Next, taking a look at some of the statistics for these mean reversion systems. So here's the ES system mean trend pullback stats. Profit factor about 10.7, about 82.75% winning trades, 145 total trades going back to basically 1999. The average hold time here, 7 days, 11 hours. For winners, it's about 6 days. For losers, it's around 14 days. Now, the trend pullback systems are prone to have 2-3 entries at times, but sometimes you only get one. And again, there's a profit curve. And chart number 5, here's the QE Momo for the ES, and you can see here profit factor is 1765. This one, less trades, 55, but 94.5% winning trades. And this one, average hold time is only about 5 days. Okay. The SPY trend pullback stats, which I don't have here, they're similar to ES. So again, we'll see if we can get a bounce earlier this week. And on a nice bounce, this QE Momo would likely exit again. If any of these get an exit this week on a oversold rally, we will, of course, send out trade notification emails to our subscribers to let you know to exit that position. Next, some other mean reversion systems. So here's the QQQ volatility system. So this is based on the VXN. That's the volatility index of the NASDAQ 100. So when it goes outside its upper Bollinger Bands is outside its upper Bollinger Bands, closes back inside, or it's below the lower Bollinger Bands, closes back inside, that gives you long or short signals. And this actually went long on Friday. I posted this on our trading community on Friday. This isn't something at this time I send out trade notification emails to, but I may consider doing that, adding these systems to the website. I'd like to have them automated where the website can just automatically send them out. But just letting you know, this did take an entry. Again, sometimes it can need a couple entries, but it does support that we could be getting close to some sort of bounce here. And image number 7, here's the statistics to that QQQ volatility system. Profit factor of 10, not bad. 185 trades, 84.9% winning trades, and average hold time about 5 days, 15 hours. So there you go. All right, guys, that does it on the systems and admin comments. Let's go and move back to the general market newsletter at hand. So item number 8 shows the index sector table, what transpired last week for the market on Friday. Friday, of course, big down day. You can see on the major indexes, down anywhere from 0.5 to almost 0.9%. Most of the market sectors were down. The ones that were up were primary defensive sectors, healthcare, biotech, stuff like that. Semiconductors got hammered, down 3% on Friday. 8.8% down for the week. Moving back to the indexes, you can see, again, 2% down for the S&P, 4% down for the NASDAQ 100, while the Russell and Dow Jones were up. Again, they pulled back on Thursday and Friday, but they still ended up for the week. They got very, very, very overbought. I think the Russell got the most overbought in history short term based on some short-term indicators like RSI, so not surprised to see that pull back. And again, you can see for the week, some pretty big moves here across the board. Definitely strong weakness in the technology, semiconductor areas. Quite a bit of strength, though, in the banks, financials, transports. Next. Item number 9 shows the economic news calendar. Again, guys, besides the general economic news here, there's a lot of various things in here. Remember, we have earnings season. Okay, so If you're trading individual stocks, make sure to check for earnings because it can be a crapshoot holding a short-term position in the earnings. All right, next, image number 10, here's Google. So just showing you Google reports on the 23rd, so that is Tuesday. You can see it's pulled back for the last couple weeks, hanging right around that 50-day moving average. We'll see how it responds to earnings. Image number 11, here's Tesla. This reports on Tuesday as well, both after the market. By the way, this was a long idea of ours back in June here out of this little tight coil. Gave us one hell of a trade. Currently, it's been consolidating. Could be an ABC three-wave. It could be a coil. Who knows? Again, this is likely to pop either way on earnings. All right. Also, the KISS system has been long Tesla, I think, since April. So it's caught this nice uptrend as well. Chart number 12, here's Meta. This reports on the 25th, so that is Thursday. Now, some of the other big tech names report next week. I think Apple is July 30th, for example. NVIDIA isn't on the radar. It's in its own time zone, so I don't think that's for another month or two. So anyway, we'll see how these react to earnings next week. Clearly, these have had nice pullbacks prior to earnings. We'll see if we get a little bounce into earnings, maybe some anticipation. Next, back to the major indexes. So here's image number 13. This shows you the 5 key major indexes with the simple Bollinger Bands. First off, look at that. Look at on the Dow. Look at that spinning top doji. Just crazy. That's a heck of a candle. Big reversal there. You can see the big reversal for the S&P and the NASDAQ off those upper Bollinger Bands. Again, we were quite stretched. Price was riding above those upper Bollinger Bands. The NASDAQ in particular had a nice doji to use as a short trigger. Everything's still above their 9-week EMA. You can see the NASDAQ is testing it. And here's the Russell at the bottom. Remember, it broke out of that weekly coil the previous week. And last week was up, but look at that ugly candle, very similar to the Dow candle. Image number 14, here's the daily chart of those same indexes. Again, you can see the Dow up here. It was outside its upper Bollinger Bands for 4 consecutive days. That's quite rare, so not surprised to see a little pullback. Of course, you could see the S&P and NASDAQ. NASDAQ 100, if it goes lower here, that lower Bollinger Bands could be particularly a support area. Next, chart number 15, here's the Dow Jones. Like I said, it was outside of upper Bollinger Bands 4 consecutive days. So it's mean reverting, basically. Now, this area here is a big support. We'll see if it finds some support there. Remember, it broke out of this coil a couple weeks ago. Both that and small caps, which started the big rally in those areas. One thing that's helped push the Dow is United Healthcare. It represents almost 9% of the Dow. That and Goldman Sachs, stuff like that. You can see this had a beautiful pattern, broke out of it. It's quite extended here short term, but it's obviously very strong, no MACD divergence, stuff like that. Next, chart number 17, here's the Russell. Again, in the last couple weeks, both the Dow and the Russell have outperformed. You can see the Russell here broke out of that coil, and it got way into this supply zone where it pulled right back from it. It was smacked down from it. One hell of a inverted hammer there. So, but pull back right off that supply zone. Next, chart number 18, here's the daily view of the IWM. So again, remember we had this beautiful, absolute textbook coil. And I talked about this the other day. First off, before I get into that, you see how price held that demand zone that we had in place? That was a good area to take a long shot with a stop. Now, if you wanted confirmation, you could have bought inside the candle with a stop. I mean, in the coil with a stop, or even if you weren't long here and it gapped out. And I know some of you guys, I used to be like this. And you get a big old gap up like you see on this candle. It's tough to chase because we're programmed. Don't chase a big gap. It's going to fill, stuff like that. Whenever you have a gap like this, guys, and it gaps strongly over a resistance trend line, like a downtrend line like this of a coil, that is what you call a breakaway gap. Those are gaps you can and you should chase because these almost never try to fill right away. Again, this open gap here will be filled in the future eventually, but usually these are very powerful signals, so you can chase that gap. Okay, and that was a heck of a trade if you bought that gap out of the coil. Obviously, pulling back here short term. The 9 EMA is your first support. Also, this lined up perfectly with this RSI trendline break. These RSI trendline breaks on the 14 RSI can give pretty good signals, like a sell signal you see back last year in the early fall, and a buy signal there in November. So try to draw trend lines on the RSI like that whenever you have whenever you see where you can do that. Image number 19, here's the 2-hour view. Again, you can see there was a smaller coil in the 2-hour, nice fractal, and you can see the gap. And I have the comments on here. Breakaway, gap where price strongly gaps over resistance. These are gaps you should chase. Okay. Moving average ribbons were just pinched to hell on that coil, so energy had built up here. They call these coiled springs, where energy is, tightly coiled and pops out of the spring, which is what it did. Moving average ribbon got too wide on that move, and it is pulling back. By the way, futures are now open, guys. At the moment, ES futures are up 7 points. Next, image number 20. Here's the equal weighted S&P. So that trades all 500 stocks in the S&P 500 as equal weighted instead of 10 stocks representing 38% like we do on the normal S&P. So when you do that, you also had a nice coil. It broke out. It's pulling back. Now, if this continues to pull back, this coil trend line would be big support, and of course, even that lower high within the coil. Next, moving to the S&P 500. Here's the weekly chart, down 2% for the week. Again, still above its 9-week EMA. We've had a hell of a move from the 2022 lows and, of course, from the October 2023 lows. We still have a pretty obvious MACD divergence here, guys. Be aware of that. Chart number 22, here's the monthly chart. Just showing this because let's assume this pullback is going to be bought again and we go to new highs again. Maybe this upper channel line could be a target over time. This channel goes all the way back to the 2009 lows. So the price has been following it well. And these moving average crosses have been very useful. The 8 and 13 month EMAs. Again, I'm not a big fan generally of moving average crosses because in most of my systems I don't use moving average crosses because they're delayed. But on this monthly chart, just for the bigger picture, it's overall caught these bull and bear markets very effectively. It's never going to catch bottoms, exact tops, but overall has caught these moves very well. Next, image number 23. So we'll talk about the KISS system. So here's the weekly version of the KISS systems on the weekly charts. Again, none of these have obviously been hit. Remember, the weekly KISS systems are going to have much wider stops than the daily. They're still pretty wide here on the S&P and triple Qs. We did have the Mark 9 there on the NASDAQ the previous week, so pulling back. But still plenty of room on those weeklies. Next, chart number 24, here's the custom daily KISS system. Again, now guys, remember this is the custom version, all right? So the stop here is 54.26. We lost the ATR support on Friday, as you can see, but still room to the stop. That hasn't been hit yet. So if this pullback isn't too deep, maybe this won't get hit and we'll go right up again. We'll see. The line down here is the weekly ATR. This is the daily, which is the thicker one. So on a bigger correction, especially if you lost the 50-day moving average, you can see how the 50-day moving average in red there, it's kind of lining up around that smart trailing stop. So that's also possible to tag that. Now, if we were to lose that, then another area to watch would be the weekly ATR. You can see that it acted as support back in April. We had a DeMark 9-13 combo at those highs, which so far has produced a pullback. You can see that's been a pretty good combo. Now, guys, on the weekly KISS tables, the S&P stopped out. So here is from the KISS tables. So the S&P stopped out on Friday, okay? And the Qs, of course, are out as well. So again, these are the standard KISS systems. The one here I'm showing on the newsletter is a custom version, has a little better stats. Next, image number 25. Here's the 4 time frames. First off, the daily in the upper left, you can see the DeMark 13. Nice pullback so far. The 50 MA could be a target on further weakness. We're below the ATR and all the other time frames. Now, short term, again, we're quite oversold. 78 minute, we have a DeMark 13, some A's, and we have a DeMark 9 on the 130 minute. Next, moving back to the standard charts, Jarbor 26, here's the simple daily view of the S&P. You can see this channel, how we pull back near the upper portion of the channel. We closed right at that channel line on Friday. We'll see if this holds or not. If not, bigger supports would be that 50-day moving average, as I stated. There's also an open gap here in the shaded area just below the 5,400. That could be a target. And then, of course, there's an uptrend line you could draw from the October lows. Comes in a little bit lower. So this is a big support area if this area is lost. Jarbor 27, here's another chart. Steve's been showing this. He's had this demand zone in place, and we're now into this demand zone. So we'll see if price can hold here. Now, if price were to strongly break this demand zone, that becomes more of a problem for the bulls short term. Again, it doesn't mean we can't rally back to a new high, but when you break a demand zone, then it becomes a resistance area. So we'll see. We're right into this demand zone. We'll see if we can bounce off of that. Jarbor 28, here's another version. Haven't shown this for a while. It's not our primary view, but again, markets can do anything they want. So as this shows this potential rising wedge, this would allow for a deeper wave 4 pullback, as you can see. Pull back, maybe break the wedge, back test it, go down lower to the lower 5,200 area, something like that, maybe even a little bit lower. Then you rally in a wave 5. But again, that's also a possibility, not one we're favoring right now. But again, we'll adapt and react to what the market does. Next, Jarbor 29, here's that S&P 500 chart with the focus on the 60-link stochastic. Remember, when it's trending above 80%, you're in a trending momentum condition, and a very simple mean reversion system is buying whenever these fast indicator oscillators get oversold, such as the 2-length RSI, 5-length Williams percent R, and 4-length fast stochastic. You can see how well that worked, especially from December all the way into late March. And even worked here a little bit in May and June. That said, the 60 stochastic, again, you can see these indicators got oversold. So if you're following that, you would be long technically now. The 60 stochastic is nearing the 80% area. That's an important level. We'll see if that can hold or not. Next, Jarbor 30. Here's another chart. This is the SPY ETF. This focuses on the ADX indicator. Remember, the ADX indicator is a good indicator to tell you the strength of the trend. You could also pair it with the plus and minus DI. So what I talked about before on this was, you could see back in late last year, October, November, and then you had this ADX expansion where the ADX went over 50. You had this kind of V-ish expansion. You see that? And that's indicative of strength. You had a pretty good sell signal when the negative DI finally crossed up over ADX there in early April. That led to a pullback. And you also, recently here, you had also ADX expansion. You see that? That said, with this last correction, notice how the negative DI has come back up pretty high, pretty quickly, and the ADX has come down. Or the positive DI has come down. So we'll see if that ends up, if they end up crossing or not. They're getting close together. Next, Jarbor 31. Here's a 60-minute view of the S&P. Again, you can see this channel that we broke last week. Now, there is a support zone in here. Here's the 38% fib. The fib from the late May lows. Okay, 38% fib comes in right at 54.88. We're pretty close to that. You can see we closed right on top of this demand zone on Friday, so that is a little support area. This whole area here, where I show the 2 dotted lines, the 50% fib, 38% fib, you can see how this kind of matches the large price by volume support. So this is a big support area. Now, there is no positive divergence at all on here, so it is possible we could also maybe get a little bounce here. then come down again and form a divergence of some sort. Okay. Again, we are oversold here. I doubt we just V up, guys. So, like I said, maybe we get a bounce soon, but maybe that bounce fails. We'll see. Again, earnings are important here. Next, chart 32. Here's a 2-hour view of the S&P. You can see that wedge pattern, which obviously played out. One way to label this would be like an ABC down of maybe A. Maybe you get a lower high wave B, then down again in C. Again, we'll see how this unfolds. Chart 33, here's a 30-minute chart. Early last week, we were showing this pattern. Steve showed it on the weekend, this rising wedge, perfect 5 waves. And this thing played out beautifully. So we gave heads up on that before it played out. We had this drawn again before it played. And again, when you see when this gapped below the pattern, that's what you call a breakaway gap as well. That's a gap you can chase short. Now again, even on the 30-minute chart, no real MACD divergence, so that does concern me a bit that this, if we get a bounce here, it might be short-lived. There's a bigger support down here you can see around 54.70, 54.80-ish. You can see the big price by volume there. Also, some candles to support a demand zone there. Chart 34, here's a 15-minute chart. Again, you can see the same wedge. Here I drew kind of a very steep wedge. We could have broken it and back tested on Friday. But again, if that fails, you got a bigger support down in that region below, which I just showed above as well. Next, chart 35, here's the triple Qs KISS system. This is the custom version. Now, the custom version did close out. Okay, so this closed out on Thursday. It also did on the KISS tables as well. All right, so while the custom S&P one is still long, the custom Q one is not. Now the 50-day moving average is below that. That could be a support on a further pullback. Again, moving average ribbon starting to pinch here a bit. We've had a nice pullback from that to Mark 9, which was a good signal. Chart 36, here's the 4 time frames. Daily up here, the upper left. Upper right. This end of bull cycle perfectly capped that end. You had an end of bull cycle. The Mark 13, notice how that perfectly timed that top. These cycles are pretty good, guys. Then we broke the ATR in resistance on all the time frames. Little support cycle there on the half day, so we'll see if we can get a bounce from that. So far it hasn't. We'll see what it does on Monday. Chart 37, here's the weekly Qs, down 4% for the week. Ugly candle closing right at the 9-week EMA. That said, notice the last week's tight doji. Whenever you have a doji like this, guys, and you're already overbought, say on an RSI, this is something you could trigger a short on. Your short trigger would have been 1 penny below the doji with an immediate stop at the high, so your risk is defined. Boom, and it gave you a nice trigger. So your short trigger would have been just over that 490. Would have given you a nice trade. Next, chart 38. I posted this early last week before the market sold off. SQQQ, that's the triple inverse ETF for the Qs. I showed this tight coil on the 60, and if anyone bought that, you've had a heck of a trade. Gapped out of the coil, and it's moved up very nicely. Congrats to anyone who took that. Chart 39, here's the daily view of the Qs. Again, nice pullback. You can see this area. We call that cloud cover. That became resistance. Now, if we continue going down here, you have the 50-day moving average, and you have an open gap right there, kind of all matching together. That could be a target to the downside. Chart 40, here's the 60-minute chart. Again, I added fibs here. You got a 50% fib right here, 61 down here. You have this big old open gap down here that may be a magnet. All right. No MACD divergence here, unfortunately. There is a little slight RSI divergence on the 5. Again, this could be 3 waves down. It could be 5 waves down. Chart 41, here's the triple Q's 2-hour time frame. We did break this one trend line from the May lows. Again, otherwise you have an open gap below there. And chart 42, here's the 30-minute view. You have kind of a wedge pattern here. You got a support area here. You do have some MACD divergence on the 30-minute time frame. Okay, so we'll see if we can get a bounce off of this. Quick check on futures again. Futures are up about 7.5 points on ES. All right, guys, that does it for the major indexes. Let's move on. Let's look at some of these indicators. Chart number 43, here's the VIX along with the VVIX, VIX ratio, the VIX and the VVIX, the Bollinger Bands. Again, you can see how the VIX closed outside its upper Bollinger Bands last Wednesday. So it's now been outside its upper Bollinger Bands 3 consecutive days. Now, stock chart shows a big spike here down to like 10.5. That's a bogus quote. So hopefully they clear that out. But been outside its upper Bollinger Bands for 3 days. A close back inside the bands could give you a VIX Bollinger Band buy signal. You also have the VVIX VIX ratio below its lower Bollinger Bands as well. And those start to generally include near some inflection points. Chart number 44, here's the VIX itself at the Bollinger Bands. Again, we haven't had a lot of VIX Bollinger Band signals lately. You can see the ones back in the past, buy and sell signals. And overall, it's a pretty good system when the VIX is outside the Bollinger Bands, closes back inside. It gives fairly good buy and short signals. Profit factor is about 2.5 for that system. I've shown statistics on it before. Next, chart number 45. Here's the NASDAQ and NYA with the NAMO and NIMO McClellan oscillators. Again, to show you how stretched the market got on those rallies early, last week on the Dow and small caps, these got outside their upper Bollinger Bands 4 consecutive days on the NAMO and the NIMO. So things were quite stretched there, guys. So obviously that needed to be worked off. And it was worked off with the market selling off last week. Next, chart number 46. Someone asked me about the breadth thrust indicator. Again, there's no breadth thrust signal, but someone asked me if this had gotten oversold. I've pointed this indicator out before. When in uptrends, when it gets oversold, a lot of times that can give you some nice signals. So despite last week's sell-off, this is still quite a ways from being oversold. You can see it was overbought there. Let me pull it back. Next, chart number 47. Someone asked me about the Hindenburg. They said there was a recent Hindenburg. So Stock Charts actually has the Hindenburg as an indicator. I added it to the S&P chart. You can see there's been 3 Hindenburg signals this year so far. One recently here, which may or may not play out, and you had 2 earlier in the year, which obviously didn't play out. Okay, there's a lot of false signals on the Hindenburg. That's the problem with it. Like, these were really good signals in late 2021, early 2022, and of course April 2022. But the ones before, they were kind of worthless. They were way too early. The one in beginning of 2020, those signaled before the COVID crash. So those played out. The ones before did not. So the daily one here can be hit or miss, guys. That said, here's the weekly version. The weekly version does not show any Hindenburgs. That said, the weekly here seems to be a little more accurate, a lot less false signals. You can see the one late 2021, early 2022, early 2020. Those are all pretty decent. Again, there's a couple that were not great, but the weekly one's been a little more effective, and you could see there's not a DeMark here. Next, moving on to the bond market, chart number 49. Here's the 10-year Treasury yield bouncing off this coil. So this coil is still intact. We'll see if rates rally from here or not. Chart number 50, here's the 10-year daily. So perfectly bounced off that 61 fib. I said to watch that area of support. Otherwise, it's still in the same downtrend channel. Chart number 51, here's TLT 20-year bonds. Still monitoring this weekly coil pattern. Has yet to break it. Chart number 52, here's the daily. You can see so far how price has pulled back from that supply zone. Next, chart number 53, here's the yield curve, which sits at 0.94. It's been inverted for, well over 700 days. It's the second longest in history. Again, I think somewhere down the road, late this year, early next year, we're going to see this go above 1, and that'll signal a recession. So whoever gets in is president, whether it's Trump or Kamala or whatever, that president will be blamed. Again, like I said, Trump gets in there and we have a recession, etc. He'll be blamed even though he had nothing to do with it. it's already been set in motion, but it is what it is, guys. We'll keep an eye on this, but for now it's still inverted. Another thing that I think will eventually signal a recession is this unemployment rate. Remember, the 5 and 13 EMAs work very well as moving average cross signals on the unemployment rate. Why? Because it's kind of like a barge. Whenever it turns, it tends to move in that direction for several years at least. You know what I mean? It just doesn't turn and then flip and reverse. It'll send a trend like these waves, long waves. Kind of like, again, like turning a big barge. It's not like turning a sports car that can go on a dime. So the fact that the moving averages crossed earlier this year for the bullish side tells me that this will trend up now over time. And, you know, when this works up to the 4.5–5% area, maybe we'll see a recession. Historically, 4.5–5% isn't very high in unemployment, but it might feel like a recession just because we're used to it being so low. Next, number 55, here's the S&P versus high yield corporate. Remember, the two are highly correlated. Just look how well these move together, high yield corporate bonds and the S&P. That said, the S&P is weaker than high yield corporate, you could see. So now if the high yield corporate was weaker, that would have me a little more concerned. The high yield corporate usually tends to lead, in my opinion. Chart 56, here's the daily version, so you can see how the S&P clearly much weaker short term here than the high yield corporate. S&P tagging a channel line. Next, let's review the market sectors here, guys. Just give you a broad look at things under the surface. So here's XLK Technology. Nice pullback. Remember, it's had a pretty obvious negative MACD divergence, RSI divergence. Nice pullback over the last couple weeks. Remember this, there was an open gap here, which we're essentially filling. There's the 50-day moving average. So that is a potential support. Again, a couple of these stocks make up 40% of it. Chart 58, here's XLC communication sector. Meta, 22.9%. Google, 26.2%. It's also been weakening a bit. These are going to move big on the earnings, guys, that are coming. Chart 59, XLC on the weekly. Pulling back here. One thing to note on the weekly, you have a pretty obvious MACD divergence, just to be aware of. Chart 60, semiconductors, also a heck of a pullback. You had a little shot across the bow a couple weeks ago, which we talked about. Remember, we had a nice RSI, MACD divergence at those highs. Here we lost the 50-day moving average on the semiconductors, so that's notable. And there's an open gap below. Maybe that's a target to the downside. Now, some areas that have been strong, banks, they've had a nice move here, obviously pulling back the last couple days last week, but still very strong charts. Chart 62, financials, again, broke out of that coil I talked about a couple weeks ago. Got a little overbought, pulling back, but very strong, obviously. Chart 63, transports. Remember, it broke out of this little pattern we showed, got right into that supply zone, pulled right back. Now, it's pulled back to previous resistance. This is now support. You can see how it bounced off of that area. In fact, you could go long there with a tight stop. Again, you had a successful breakout and back test. Chart 64, healthcare sector has also been strong. Breakout, pull back. It's basically back testing this support area. Chart 65, consumer staples. This broke out early last week, pulling back. It's now back testing that area. Chart 66, biotech. Had a nice move lately with the small caps. It's been pulling back as well as it got overbought. Chart 67, industrials also had a nice move, but pulled back last week, back to the 9 EMA. Chart 68, real estate. This area's been quite strong. Just a tiny pullback so far. Chart 69, energy. This area, remember, this broke out of that channel finally. Again, this broken channel line will now be potential support. That said, the actual crude oil is quite weak. So the stocks are holding up pretty well here considering how weak crude oil is. Chart 70, here's oil services. And chart 71, here's the weekly view of oil services. Remember, I've been talking about this weekly coil for quite a while. This is something I do own a little bit of this, but if we can break out of this coil eventually, I think it melt up through this thin zone. It'd be a good swing trade. Now, moving on to commodities, they were absolutely pummeled last week. Every single commodity was down, guys. Every single one. DBC, that's the index, down 3%. Remember, stalled at the upper coil trend line a few weeks back. Jarbor 73 crude oil down 4.3% last week. Stalled at the upper coil trend line the previous week, you could say. Jarbor 74, here's the daily. You can see the same coil. Step back to around its 200-day moving average now. Jarbor 75, natural gas, UNG. Remember, after pulling back off that 200-day moving average, it pulled all the way back to these, April, May lows. Trying to bounce here a little bit short term. Jarbor 76, copper, absolutely pummeled. This thing had a hell of a move into the May highs. You can see where the moving average ribbon got wide. Sold off, bounced. This area became resistance, previous resistance, you can see. Selling off. So where could this thing go eventually? Well, a big support area is down around here. That's a big demand zone around that 200-day moving average. Jarbor 77, DBA, agriculture. Remember, last time it bounced off that demand zone, that's been a big, important support. You can see it stalled at the 50, 20-day moving averages the previous week. Logical area to pull back from. It's now back into this demand zone. Now, the more times we test this demand zone, guys, the weaker it becomes. It's like standing on a frozen lake and you're jumping up and down in the same spot too many times. You weaken that ice, you could fall through. It's kind of so it weakens that area when you test it too many times. If this is lost, maybe this area down here would be your next target. You also have the 200-day moving average. Showing some others I normally don't show. Corn also down 2.1% for the week. Now there's a big support zone down in here. Corn's interesting. It's been actually downtrending since 2022, unlike a lot of the other commodities which have been very strong. Jarbor 79, here's corn on the daily. Again, sell off recently. Now you do have a coil here. Now what I don't know is if this coil maybe breaks down one more time for a better divergence or this is the bottom. But it is quite oversold. Jarbor 80, here's one I'm interested in, wheat. So wheat has had a heck of a sell-off as well from 2022. You have a big support area here, little double bottom, also support going back to 2020 lows. So let's take a look at the daily. Here's the daily, WEAT. Remember, you can buy this as an ETF. You have MACD divergence here on the daily and RSI divergence. So that, supports, this could be a little bottom play if you think that weekly support will hold. It's definitely had a heck of a correction just since May. Jarbor 82, coffee. Now this one's been strong, but it's pulling back off this resistance area. Should add a horizontal line up here. You can see it's had a pretty good rally since last year. I'm sure Starbucks has paid attention to that. Anyway, pulling back there a little bit from resistance, but otherwise still quite strong, unlike a lot of the other commodities. Jarbor 83, Bitcoin, so it's up 11.5% for the week. To me, guys, this looks like it may have completed a fourth wave pullback. We've had this in place for a long time, this wave count, if you go look at our newsletters. So you can see that perfect three-wave pullback, ABC. If this is correct, we'll see Bitcoin go to new highs in a wave 5. Jarbor 84, here's Bitcoin on the daily chart. You can see how it bounced off that support area. Kind of have this expanded coil-like pattern. Jarbor 85, Ethereum. It's lagging Bitcoin, but it did break this trend line last week. It's holding above that. Some of the crypto stocks, HUT. It's been a nice move here, a nice bounce on Friday after pulling back for a couple days. Jarbor 87, Mara. Took out that resistance over a week ago. Pulled back and back tested it. Bounced on Friday a little bit. And Jarbor 88, Riot, also bounced nicely on Friday. Looking at the currencies, here's US dollar. You can see bounce the last couple days last week off this little demand zone. Zooming out a bit, here's the weekly chart. We still have this coil-like pattern. Not going to get into these other potential counts. Right now, we're still in a coil. Bouncing off that support for now. Jarbor 91, here's the euro weekly. Kind of an ascending triangle look to it. Little pullback last week, but really no changes in the pattern though. And one area I think is quite extended, oversold, is the Japanese yen. It did bounce so far the last couple weeks. And Charber 93, here's the monthly chart. Remember, you have this big monthly wedge here. I own a little bit of this for a longer term swing. You have monthly MACD divergence, RSI divergence. You know, again, maybe this is due finally to bounce sometime. It's definitely been in the toilet. This is below the 1998 Asian currency crisis, I think. Now, moving into precious metals, Charber 9, they were down as well last week. Charber 94, here's gold. Sold, after making a brief new high, sold off. Now, there is the band zone here. Yeah, the 50 and 20-day moving averages here. We'll see if it can find support in this demand zone or not. If not, then this may eventually go down and break down to the bigger demand zone down here. But for now, this is your short-term demand zone. Charber 95, here's the daily chart, or the GLD ETF, shows you the same thing essentially. Charber 96, here's gold on the weekly. Like I said, down about 0.9% for the week. So this potential wave count, this nested 1-2, 1-2, allows for much higher prices in gold over time. That said, did we complete or a wave 5 here? And we're eventually going to have a wave 4 pullback. We'll see. But if this is the correct count, eventually we'll make new highs in a wave 3 and 5 again. Charber 97, there's the monthly chart. Like I said, my long-term target on gold is, well over 3,000 an ounce. I think it eventually hits that. Charber 98, silver. Now, silver, leaking oil. I was concerned about a lower high here, and you could see last week it lost the 50-day moving average. That's been an important support. So this allows for maybe a deeper pullback in this area. Charber 99, here's silver on the weekly, down 6%. Charber 100, here's silver on the monthly. You can see silver, like I said, it's been logically pulling back off the supply zone, right? That's the big resistance area. That said, I do think eventually silver will tackle this 50 area again. That was high in 2011. That was the high in 1980 with the Hunt brothers tried to corner the silver market, like the Dukes from Trading Places, that movie. Here's some of the ETFs. SLV, that's the weekly, and that was the monthly. SLV on the weekly here. So there you go, guys. Moving on to the mining stocks. Charber 103 GDX weekly, down 2%. So the stock's underperformed. Steve had this count here, this 5 wave. If we have completed 5 here, we may be due for a deeper ABC correction. Again, this area is still in a longer term uptrend, but an ABC correction could take some time to unfold. Charber 104, here's the daily. Again, lost that 9 EMA last week, but we're still above the 20 and 50. Charber 105, here's the 60-minute chart. We were showing this MACD divergence early last week as a warning, and this has obviously been playing out. Charber 106, here's the BPGDM, Bullish Percent Gold Miners Index System. Remember, I've talked about how this is up in the sky-high area. So I was looking for gold stocks not to have a big run this time, like they did back on March 1st when this gave a buy signal from oversold territory. This is obviously not oversold territory. This is, way overbought territory. Some of the individual trades in the mining, like Newmont, gave a great trade out of this coil. Obviously pulling back some. Hope he took some profits before. And the silver stocks had a nice pullback as well. Again, we talked about going long this back in March 1st early this year. That was since that time it tripled. So finally, moving to the last part of the newsletter. I didn't add any new trade ideas here tonight, guys. I may look for some later this evening. I'll post them on our trading community. STVN was a nice long idea I put out a few weeks ago at that higher low. I said that was a good area to have a stop, and it gave me a nice trade. Charber 110, NVIDIA, nice pullback. I'm wondering if this is an ABC pullback. You got a big demand zone down here. Got the 50-day moving average. If it gets down into here, that could maybe be a good area to watch for a buy. By the way, NVIDIA doesn't report earnings anytime soon. Here's an inverse NVIDIA ETF. Actually, looks like it could break out here. Could also be used as a hedge if you own NVIDIA and you don't want to sell it. Ford, this was a long idea of ours back here in June. One hell of a trade out of that coil. That big spinning top on Thursday was a good area to tighten stops. Could have put a stop right at the low of that doji and been out for very nice gains. Nice sell-off on Friday. Jarbor 113, Rivian. Nice move out of the inverse head and shoulder pattern. Been pulling back here a little bit lately. Jarbor 114, AMD. By the way, this has earnings on July 30th. This, we had a long idea back here in June on that channel. It gave you a nice trade to the supply zone, but if you didn't take profits in the supply zone, you'd probably be crying or didn't set a stop. That was the area to take profits. And look at that sell-off since. We're now at the 200-day moving average. Maybe we bounce here a little bit soon, but this is an ugly chart, guys. Some others, here's some that never triggered. YY, it's still a potential flag here. So I'm keeping it on the list for now. I don't know when earnings is. You want to check on that. PACB, a little biotech stock. Recent volume into it, but it's pulled back. We'll see if it finds some support there. And Jarbor 117, MDGL. It's been on the list for a while, kind of a cup and handle. You can see it did make a higher low, potential handle. It's now trying again. If it goes up and it can actually take that 298 out, I think it pops. All right, guys, that'll do it. We'll see what happens with the market. Check on futures here. ES futures are up 10 points. And NASDAQ futures are up 68. Crude oil is down. And what is gold doing? Gold is up 12. All right, guys, have a wonderful rest of your Sunday. Thanks for all your support. And if you're on YouTube, again, consider checking us out. Consider subscribing. Remember, go to enroll. Our best membership is our 6-month membership with roughly a 50% savings over the standard monthly because of the time. You get a break by paying 6 months up front. All memberships give you the same thing. All right, that'll do it. Have a great day, guys.